Hey guys, Ryan Hoffman here. Wholesale Capital Corporation, your direct mortgage lender, doing mortgages for new home purchase, investment property purchase, refinance of existing mortgages, and reverse mortgages. Let's talk about credit, bad credit and zero credit, and oh my gosh, credit. Now, you can do traditional financing, FHA, all the way down to 580 before you have to put anything more than 3.5% down. So 580 and above, you can do 3.5% down. Good to go. Easy peasy. You can do FHA all the way down to 500 if you can put 10% down. Now, there are other programs also that are out there that can get you all kinds of crazy loans. Specifically, let's talk about people who have a zero credit score. Now, zero isn't that big a deal. It just means that you don't have any credit history showing up. You haven't borrowed money that reported to the credit bureaus, which is totally fine. In my opinion, that's the best credit score to have because if you can live without borrowing money, good to go. Now, there's special rules, loopholes, and gotchas you got to go through. We basically got to prove that you pay the bills that you do pay on time. And once we do that, you're ready to rock and roll. Easy. So that's zero credit. Now let's talk about people who have gone through a major credit event recently. That'd be something like a bankruptcy, a foreclosure, a short sale. These are all things that can drastically, that can put a 4 to 7 year wait period before you can do anything with the mortgage again. Now, there are programs available that will allow you to get a mortgage one day after a bankruptcy, foreclosure, or short sale. Now, you can say when would this actually make sense for somebody to do? Think about somebody who's just went through a divorce and they've got all kinds of crazy debt tied up, and then they want to buy a house as soon as they're done with wiping out and bankrupting all the debt they got from their ex. That's the most obvious of reasons why somebody would do a one day after bankruptcy loan. Now, as you can imagine, these loans are a lot higher risk to the lender. Thus, they are a little more expensive on the rate, but that's to be expected. And you are able to refinance out of these loans once your credit does recover and gets back to a normal state, or you've gone past the waiting period required for a standard loan. So long story short, don't be afraid of having the conversation with a really good loan officer. I'm pointing at me if you couldn't tell. Call me and we can walk through what programs might work for you and see if it makes sense for you to consider buying a house right now. You know, with rates starting to go up, now is the time to really be considering it. The Fed's raising rates. The quantitative easing has run out, so the Fed's not buying bonds anymore, which is going to cause rates to go up even farther. And all these things are coming around. Now it's a great time to buy. So if you are on the fence, you're thinking your credit's too bad, but you're interested in seeing what you could do, give me a call. Number is right there. This is Ryan Hoffman. You guys have a great day, and I will talk to you later.